Hello, how you guys doing today? Today, Wish just had its earning up to hour, and I listened to the conference call, and also I reviewed the investor presentations and also look at the earnings release. And I'm gonna analyze it and talk about it with you guys on this video. If your first time on my channel today, and please give me a like and subscribe, and make sure to turn on your notifications. But today, I'm gonna mainly talk about is turnaround strategies that the CFO is talking about, and also the financial numbers on their Q4 earnings. And let's go ahead and take a look at their investor presentation real quick. On their financial highlights, and this quarter revenue is $289 million. So which is pretty in line with their forecast, right? The revenue in line with the previous quarter, but then of course decreased quite significantly compared to last year, right? And also Q4's adjusted EBITDA is negative $23 million. So it still have a negative EBITDA, but this number is pretty acceptable. And negative 23 million exceeds its guidance. And Q4 free cash flow is negative 50 million. Also, it's still holding $1.2 billion in cash. And this is a very important number right here, that it still has $1.2 billion on hand is holding. It has adjusted EBITDA of negative 23 million for last quarter. So we have plenty of cash for it to turn around, right? We have $1.2 billion of cash to turn risk around. When I look at this investor presentation, the cash on hand number are the first thing I look at. The second thing I look at is the net loss and the adjusted EBITDA. And those are the key number that I usually look at when I look at, when I'm looking at risk, right? Because I wanted to be able to have enough liquidities for 2-3 years to turn this company around. And we all know this. This is not going to turn around in a quarter or two. Okay, so we all expected Q4 earnings is going to be a bad one, right? We just wanted to be in line with previous quarter, which is it did. It did pretty good. I pretty surprised the number coming in line with Q3 2021. And it's a good thing. It's not as bad as everyone is thinking about. I know aftermarket we were down 6%. I believe with this earning is pretty solid. Then $2, that support is it's pretty strong. And let's see how it's gonna react tomorrow on the market. If the market conditions still looking pretty good, then we might hold above $2. It's all depend on the overall market, and how the overall market is gonna react. During this crazy time about the wars going on, the inflation is going on, and all that stuff, right? Let's look at the turnaround strategies. Few things that the CEO was putting out on the conference call. It's talking about how Wish gonna improve user experience. And it's talking about how they build the merchants relationships, and talk about how they're gonna achieve organizations efficiencies, which is they are all working on that. Like I say, those results is not gonna happen in 1 or 2 quarters. It might be end of this year that we might see the result of how they improving it, right? So it's gonna take at least 3 to 4 quarters in order to see the result, right? They redesign the Wish homepage. They make it more user friendly, and they make it personalized shopping experience for all the customers. And now it's launched on the Android in the US. For the people who are using Android in the US, that be able to testing out. The second thing that they also have the Wish clip, which is now they have about 100K plus video that clip when they're selling their products, and people can start viewing it. And when they purchase product, right? This is something that is really nice that you can actually see, on the video clip, so that provide you better shopping experience, right? And number 2, the turnaround strategy that, the CEO was talking about the merchant relationships, right? So they implemented the Wish standards, how you have open like questionnaire, and they're gonna look through your form. They want to make sure that you're the right merchant, the quality products, and then they're gonna list you, and then they're gonna let you sell stuffs on Wish. So that's gonna block and take away some of those merchants that selling fake products or bad quality products, right? So this gonna be improving like customers' experience, because definitely gonna improve like the retention of the customers. The customer have good experience shopping at Wish, they will come back, right? So the third strategy is, so they try to cut costs, right? they tried to cut that cash burn quick. So this is how they did a very good job on this, how they still maintain that $1.2 billion on the cash positions right now in Q4 2021. So they're cutting 15% or 190 positions globally. So they actually 79 country that they don't think is profitable, country. So they exited that, they cut their workforce in 15%, and they are possibly saving millions of dollars. So over here, let's take a look at their MUA real quick. Q4 2021, they only have 44 million, and Q4 2020, they have 104 million monthly active users. It decreased significantly. I think that's mainly due to they cut down their marketings and ad expense. But down the road, we want that monthly active users to go back up to to 100 million. So that's the goal that I think that need to achieve, because that's the number that we are shooting for. So when you look at the gross margin, 42%, which just decreased a little bit compared to Q4 2020. 57%. Operating expense, $184 million compared to $963 million. That's a significantly decrease. That's decreased by a huge amount, which is they did a very good job on Q4 that they are only spending $184 million on operating expense. So this is how they're gonna still remain that much cash, right? So that's the number that you really want to look into. So for the full year of 2021, revenue 2.1 billion, and for the year of 2020, 2.5 billion. So that number, the revenue number, pretty much in line. You look at the adjusted EBITDA was negative 199 million for 2021, and 2020 217 million. So on 2022, we really want to see that adjusted EBITDA number to be lower than $200 million. So remember, guys, we only have $1.2 billion in cash, but that doesn't mean that you have $1.2 billion to burn, right? That covenants requirement that you need to meet, okay? So technically, you cannot burn $1.2 billion all the way. Otherwise, you cannot meet the debt covenants. In order for you to do a debt offering, you need to keep that debt covenants in place and meet the debt covenants requirements. And this is one of the requirements that really need to look out for, because that's going to affect their liquidity. For guidance Q1 2022, and they expected adjusted EBITDA to be a negative 70 million to 60 million. So this number quite a little bit high. I would expect that should be in line with the previous quarter or this current quarter. This current quarter of 23 million, right? And I hope this video is helpful for you guys. And if you like this video, please like and subscribe, and make sure you turn on your notifications. I see you guys next time. Thank you.